I'm John Hanna for CDTV.net, and we have Greg Womack, President of Investment of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, Greg.
Good afternoon, John. How are you today?
Great, sir. Just that kind of like the heat, I think, is starting to get to my head already from the outside temperature here in New York City. We're almost about 80 something now. So it's kind of like a big jump for me from the nice, cool weather that we've been getting here in New York City, and then it started to go to the 80s now. So it's a start of we're definitely in spring and heading towards summer. How about yourself, sir?
Well, we survived the big weekend. We had a lot of tornadoes and storms through Oklahoma and pushed up through Kansas, but we did survive that. But yeah, I tell you what, when it comes springtime in Oklahoma, you always have the weather on. You just never know.
Right, that's true. I saw that on the TV reports about the. They even had the warnings ahead of time, so at least the Weather Service is really looking out at the weather patterns and trying to predict where the tornadoes is going to be coming up.
The great technology, a lot of the best technology formed here in Oklahoma, and because of the history of our tornado activities in the past. So very fortunate, and prayers go out to those who weren't as fortunate, who lost property, and some who lost, of course, their lives in Oklahoma and some in Kansas. So.
Right. Oh, by the way, we're live, and if you can just speak closer to the phone, to the microphone right now, that'd be
Okay.
awesome.
Is that better?
Yes, sir. All right. So here's the thing. What do you have for us for this? Before I forget, we had the passing of Dirk Van Dyke last week, and just wanted to, say that he was a wonderful person, a guest, and a very good person to know. I mean, I've worked with him for like almost 3 years.
Yeah, that was a surprise. Of course, Dirk and I have done several interviews with you as well, and together, and very surprised to hear that. And our prayers go out to his family, and I'm sure that's a terrible loss.
Yeah. So we're gonna miss him. All right. So So what do you have for the market week report, Greg?
Well, we had a Spanish bullfight last week. We had concerns about surging bond yields in Spain, and that sent the equities down both here and, of course, abroad. And the Dow followed last week's downdraft with 3 days of triple-digit losses. Its fourth straight losing week was a sad distinction shared by the global Dow. But of the four domestic indexes, only the small-cap Russell 2000 escaped having its worst week so far this year, though the S&P and the NASDAQ managed to remain above 1,300 and 3,000 respectively. Despite high gas prices, oil slid closer to $100 a barrel, and the 10-year Treasury yield hovered around 2%. So as we look at the returns, John, as of last Friday, the Dow is up about roughly 5.2%, NASDAQ's 15.6%, and the S&P right at 9%. As we speak today on April the 16th, at around 1 o'clock Eastern time, the S&P is pretty much flat, been down some today, and the Dow's been up around 80 points as we speak. NASDAQ's taking it on the chin. It looks like Apple's taking a dip in price today from its all-time highs. But if we talk about last week, John, we had consumer inflation rose 0.3% in March, according to the Bureau of Labor Statistics, and that puts the annual inflation rate about 2.7%, which was slightly lower than the previous month's 2.9%. But we had a decline in energy costs and helped keep wholesale prices relatively static in March. But keep in mind that the so-called core inflation, which excludes food and energy, was up 0.3 at the wholesale level. So even though we're keeping below 3% inflation, of course, if you could include food and energy, we we were probably experiencing much higher inflation than that. There was talk about the pain in Spain. As I mentioned just at the beginning here, Spanish bond yields continue to rise, hitting 5.93% after the Bank of Spain reported that their Spanish banks nearly doubled their borrowing from the ECB last month, the European Central Bank. Then we had the U.S. trade deficit fell 12.4% in February to $46 billion. Exports were up by about $0.2 billion, and while an 18% drop in imports from China left imports down about $6.3 billion. China's economy was kind of at the forefront as well last week. It grew at an annual rate of 8.1% during the first quarter, and that's substantially lower than the previous quarter of 8.9%. But when you look at China's economy compared to ours, still growing about 5% more GDP per year, even at those levels. Winning Mega Millions. Just over a dozen employees of Instagram, they are the creators of the photo sharing app for mobile devices. They'll split, those 11 employees will split the $1 billion that Facebook agreed to pay for the 2-year-old company. So talking about tech startups and 2 years old company, $1 billion, it's a pretty significant sum. Then we had the Federal Reserve's Beige Book report. And basically they said the economy continued to expand at a, quote, modest to moderate, quote, pace, but noted concerns about higher oil prices. And though hiring was said to be steady or slightly up in many districts, employers and also reported difficulty in finding qualified, high-skilled workers. So that could pose a problem in the employment picture as we go forward, of how we've got to continue to have educated, high-skilled workers. If we look ahead, John, this week, you've got earnings seasons that's underway, and several key banks reporting this week. Forward guidance about coming quarters could be even more influential than the earnings themselves. So we have manufacturing, housing, retail data. All this week will suggest the state of the recovery.
Okay, so we're now in the Spain watch section, wherein the market is looking at what's happening in Spain. Before it was Greece, and pretty soon we're going to have to come back to Greece again with regards to the financial issues out there. Now, are we seeing some of the dominoes starts to fall down a little bit?
Well, I don't know if it's the dominoes, but for sure, these things are going to continue to crop up over the coming years and months ahead. With the ECB and the international efforts have put kind of a Band-Aid on Greece and these other countries like Portugal and Spain. And I think they'll continue to come up because, you have certain benchmarks that they have to meet as far as getting new funding, but also austerity measures that have to be put in place, and these aren't very popular. And so I think you're going to continue to see problems from that area, even though there'll be some temporary fixes and kicking the can down the road, like we have on Greece for now. They will come back around at some point and need to be addressed. So I think that's what we're seeing right now in the markets, where you have, like Spain is cropping up as far as more, having to borrow more money from the ECB. And so we're starting to see that with interest rates starting to climb over there. And so, yes, I think, John, it will become more, as we continue to move forward, we're going to see more of these things pop up with these European countries that are having problems. And that will affect the markets.
Yeah, and knowing all of these problems now, shouldn't the U.S. side should be ready for anything that might happen? So it's kind of like slowly putting in some sandbags in front of their investments.
Well, that's a good question, and it just depends on how severe things were to get. I think in the near term they're probably going to stave off a major issue as far as banks and countries defaulting, but it's hard to see what the long-term aspects could bring and the effects of the eurozone continuing to have issues. But in the near term, yeah, you kind of look at it on a case-by-case basis of what you're owning, putting in, whether it's sell stops or putting in, buying some put option protection. But, you've got that with just about everything. I mean, whether it's China, slowing even more than what people anticipate, or I'm not saying that's happening, but that could, if that were to happen, it's going to have that ripple effect through the commodity world and of course through our markets as well. So, we live in an uncertain world, and you never know what you're going to wake up to in any particular day. So diversification will help, but also you need to add some protection mechanisms, whether it's sell stops or put option insurance on your portfolio to help you sleep better at night.
Okay, that's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CDTV.net.